day, guys. Hope you all are doing well. Hope you're doing good. So today we'll be talking about candlesticks and what they represent. We've already talked about some candlesticks earlier, but then now we'll be talking about the specifics in terms of like what candle structures mean and how you can apply them in the crypto and forex market. So we have two variations. We have the bullish candlesticks. We have the bullish candlesticks, and then we have the bearish candlesticks. Okay. So for this two, then we have different types under each candlestick type. Okay. So like for the bullish candlesticks, there are several different kind of patterns that you can find in the market. But for me, I would be talking about a few ones. I'm talking about the ones that beginners can also use and get profit in the market. Let's start with the bullish candlestick pattern. So under the bullish candlestick pattern, we have, I'll be writing it out. We have the bullish engulfing hammer signs. We have the momentum candles, bullish momentum candles. We have the tweezer bottoms, and then we have the bullish Marabozo. So I'm talking about these 5 candlesticks that indicate bullish trend in the market. Okay, and let's start with the bullish engulfing candle, and let me explain what it means. Before I show you guys, I just want you guys to have an abstract understanding of what it means. Bullish engulfing candle, what it means is that in a downtrend market, when the market is exhausted by sales, for buyers to take over, or when buyers take over, there is an indication in the market. So you can easily see or tell when sales have been exhausted and when buyers are in control. There are some indicators that we use, and I'm talking about the engulfing candle right now. So when the candle at the end of a downtrend or at the beginning of an uptrend is a green bullish candle that is larger than the last previous red candle, that's what we can call it, a bullish engulfing candle. Basically, from the name, it engulfs the last red candle. So we can look for a downtrend, and I will show you guys what it looks like. Okay, or let me even draw it first. So let's say this is the last previous red candle. A bullish engulfing candle is a candle that engulfs it. So like basically this is engulfing the previous red candle. So we have downtrend like this. Now market is already exhausted. So for the beginning of an uptrend, we can see a bullish engulfing candle too. Okay, so that's just it. Okay, so I've seen an example of a bullish engulfing candle, and it is right here. And let me zoom out for you. So yeah, we can see a green candle that is engulfing the last previous red candle, and we've had a downtrend for a while. Okay, so this is a very good example of a bullish engulfing candle, and we can also see where the trade took us to. Like it went way higher. So basically, we know that this is a downtrend. Okay, higher highs, higher lows, higher highs. If you don't know what the trend is, you can check my previous videos. I'd also link it at this point, so you will know how to read or how to learn about trends. Okay, once we've seen a downtrend like this, okay, and we wait for a confirmation of sellers being out of the market and buyers taking over. Once we see a bullish candle like this, it is a bullish engulfing. Once it engulfs the lower candle like this, all we have to do is wait for this first interaction to be done, and we wait for the pullback. So it's at the pullback that you can buy, or if you are ditching like me, you just buy immediately after this bullish engulfing candle. Okay, and you place your stop loss just below. and let me show you guys what this simple technique can give us profits. So let's say we've just bought just above here, okay, and we have set our stop loss just below the previous low. uh, yeah, so this gave us a sweet 6 to 1 risk to reward, okay, and this is a very good trade, honestly, guys. But yes, that's just one about bullish engulfing candles and how it can give profit. So let me give you guys another example on bullish engulfing candle. Okay. Okay, guys, I've seen another example of bullish engulfing candle, and this is on the BTC chart. I think it's around 2024 August 5th, around 8 a.m. I'm just trying to show you guys what it can do in the market and how we can try to take advantage of this kind of patterns. Okay. Usually these patterns would show more on the lower time frame, but I'm trying to show you guys on the higher time frame. So when we move to the lower time frames, you guys will be able to appreciate the occurrence of these patterns easily. On the higher time frames, it can be shaky sometimes, but still on still, we would always find that interest higher time frames, lower time frames. And if you don't know what time frames are, there's also the link on my page, and I would also put the link just by my top right corner here. So while you're watching, you'll be able to maybe bookmark it for later or watch it immediately. So yes, where is the bullish engulfing candle? It's just here, and it is way bigger than the previous low candle. It's engulfed this and then created an higher high. So basically, Bitcoin had a downtrend, even if it's short term, you had a downtrend, okay, and then just at this point when sellers were exhausted, we can see a bullish engulfing candle which engulfed the previous candle, so it's bigger than the previous candle, basically previous red candle, basically. So in this case this is a signal for you to actually buy into the market. So guys, just imagine you bought at this bullish engulfing or even at this pullback here, right? Let me show you guys. So let's say you bought at this pullback here, you put your stop loss just below this low. Bitcoin rose from 54k to 94k. That's a whopping 70% gain on your trade just because you know bullish engulfing candle, guys. So yes, that's about bullish engulfing candle. Now we'll be moving to the next bullish pattern, okay, which is the hammer sign. This is also an important bullish pattern that we should also learn. Okay, guys, so what next we want to talk about is hammer candlestick, okay, and an hammer candlestick is also a bullish candlestick pattern. It has a short body with an elongated lower wick. Yeah, just look like something like this, okay. So I'll show you guys what it looks like and how it can be applied into the market. Okay, so I've seen what a twist small base, basically small body and a long wick. You can also the wick can also extend to both sides, but you should have a longer wick on the base, okay. So now now when we look at a trade like this, we've had downtrend for a long while, okay. This chart is downtrend, then there are so many indicators to like why this can be a good area to buy. So we've had a downtrend for a long while, and then we see a tweezer, yeah, tweezer bottom here, okay. trying to show you guys this. So we see a tweezer bottom here, and if you can remember, in the last pattern I was talking about, I talked about the engulfing candle. So just after this tweezer candle, we can see an engulfing candle here, right? So that indicates that buyers are into the market and sellers are running out of energy, basically. So this is a good place to buy. If if you see something like this, it's a good indicator to buy. Although if you're using candlesticks, you also need to combine it with the trend of the market to know if you're against the trend or with the trend. Okay, let's just look at the percentage increase from this combination of bullish engulfing and tweezer bottom. So let's this because this will be the next target if we are going to be buying. So yeah, I think it's a good trade, honestly. Then this is a it has a risk reward ratio of 4.88, which is almost like 5 to 1 risk to reward ratio. So it's actually really good. Okay, so let's go to the next candlestick pattern, which is the bullish momentum candles. Okay, so basically, what this means is these are massive candles, either to the bullish or to the bearish side, which indicates either a buy or a sell, but like institutional buys or institutional sells. What it means is that banks are buying into, or banks are probably selling, which causes that what we call fair value gap or imbalance in the market or inefficiency in the market. Okay, and then usually bullish momentum candles are always 2 times bigger than the previous candle. Okay, and they are mostly effective in choppy markets. All right, so let me show you an example. Okay, so I've seen an example of a bullish momentum candle, and what it means is that the candles are usually 3 or 2x, 2 times bigger than the previous candle, and like they are always in a choppy market. Basically, choppy market is a market that it really has no direction, but then it just helps to show where the trend of the market is moving to or where it's rotating to. Okay, so we can really call this a choppy market because there's no clear direction. It's up, down, up, down, up, down. So it's not clear, right? And then at this downtrend, okay, that is downtrend in the choppy market because we have internal ranges. Okay, then we saw this clear momentum candle. Just one. Then we add another momentum candle, which was about 2 to 3 times or more than that bigger than the previous candle. So these are indications of of a reversal, okay, and also an indication of a clear bullish trend, okay, because we've had a downtrend, then we can see momentum candles to the upside. So this momentum candles helps in playing continuation. So when we see this, we will know that okay, we're just going to play continuation to the upside. Okay, so that's that about bullish momentum candles. And the next one we'll be going to talk about is the tweezer bottoms. So let's talk about tweezer bottoms. And tweezers, basically, we have the two types. We have the tweezer tops and tweezer bottoms. Since we're talking about bullish candlesticks, we'll talk about tweezer bottoms. Tweezer bottoms is a two candle combination, the bullish candle and the bearish candle, both together, and basically they indicate that market is about to reverse to the bullish trend. Okay, so now we have I'll show you guys where we have the tweezer bottoms here. Just try to zoom for you guys. So this is what they look like. Similar bodies and almost similar wicks, okay? And this is after seeing this, we can see that markets had a, a short-term downtrend, okay? Lower lows, lower lows, lower lows, the downtrend. And then we started seeing some consolidation here. And just in the consolidation, we can see Twitter bottoms. So this is an indication of rejection and reversals, okay? And then when we see something like this, all we have to do is just wait for any major or any minor retracements just above the Twitter bottoms, and we buy. And we set the stop loss at the week of the Twitter bottoms, okay? So that's how to take an entry on Twitter bottoms, and you will just wait for the highest liquidity above as you take profit, okay? Simple. So let me show you guys what this looks like using a Twitter bottom. So yes, using the Twitter bottoms from this trade on the 11th of November 2024, from these Twitter bottoms we can get a 6% profit, okay, and then minimal stop loss as well. So this is a very good trade and it's a good risk to reward trade as well. All right, so yeah, that's how you use Twitter bottoms and how you get entries from Twitter bottoms as well. Okay, I made a mistake with the spelling earlier. It's not double O, it's double T. So that's that about Twitter bottoms. I think the next that we have on the list is bullish Marabozu. Okay, and I will explain that in a few minutes. And then bullish Marabozu basically is massive green candles without wicks. They are just indications for continuation in the market or for to show that there are institutional or just imbalances in the market. Okay, and then they're also used as an indication for continuation of the market. And then I'll show you guys where it is. So on this chart, yeah, on this chart, we can see a few bullish Marabozo. Okay. So first of all, we see a downtrend, lower lows, lower lows, lower lows. Then we start seeing a rejection and change in structures, okay? Because here, there was the last low. Of course, I'm sure you guys know what trend is now. So we have this, um, we have this is the last lower low, lower high. Then we have this low that created this high. So what it means now is that there's a shift in the trend, considering we don't break these last lows, okay? Then we created these areas of liquidity, which is like this last low, then created an higher high here. So now there's a shift and the proper shift in trend, okay? So now we can tell that there's a shift in trend. What do we do? How do we make money from it? Good question. So once we can tell that there is a shift in trend, we can see that because like here now, here we can tell that it's a bullish Marabozo. It's a green candle, not so massive, but there's no wick, okay? But then after this indication of after this indication of uptrend, we saw this bullish Marabozo. Yeah, no wick at all, no wick, just buys. This is an indication of continuation, playing higher highs, and then continuation of uptrend. Because now we know that the market is uptrend, so what we have to do is just wait for a rejection or a retracement into this bullish Marabozo zone, and we take a buy. or if you're not patient, you can just buy immediately. You see things like this because these are things that you see that you buy into, and you just set your stop loss just below the week or like the previous candle. Okay, so let's say we bought here, but yeah, putting stop loss. So yeah, this is a 1% move. It's not so much, but it's a 5 risk to reward. Okay, so what it means is that if you put 1 naira, you get 5 naira. If you put $1, you get $5. So this is a good 5 risk to reward trade. And then yes, that's about bullish marabos. They're actually different. There's also the bearish Mariposa though, but then I'll explain that when we're talking about bearish candlesticks.